Today's our September update, and we're talking a little bit about what Albertans are doing with their mortgage rates and what they should be doing as we move into a really different market in Canada. So for starters, the 5-year Government of Canada bond yield came off from about 3.5% down to about 2.8% today. So that's a 70 basis point drop in what we should be seeing in fixed rates. So we were seeing fixed rates in the mid 5s still for some property types, and they've moved all the way down to the mid 4s at many lenders. We've got insured rates at about 4.44%. That's for somebody putting less than 20% down. And we've got conventional rates at about 4.64%. That's for somebody with more than 20% down. Of course, if you're buying a rental or things with 30-year amortization, sometimes that's going to increase your rate a little bit. But overall, we've got rates in the mid 4s for most borrowers right now. That's a quick update on fixed rates, but what I would really like to talk about is variable rates. We've now seen 3 cuts by the Bank of Canada, and the overnight lending rate is sitting at 4.25%. We expect to see further cuts probably in October and December of this year and into Q1 of next year. So we've seen many Albertans rush towards variable rate mortgages again. Now that they're more affordable, your starting point isn't in the 6s, but maybe in the mid 5s for those variable rates. It's really opening up some opportunity. So what's our key mortgage strategy right now? We are seeing people take a variable rate mortgage today with the intent to reevaluate that mortgage and look to lock it in early Q1. We've seen clients move away from taking these 2 and 3 year rates because simply they think they might miss the bottom. We're expecting rates to stay a little bit lower for a little bit longer. You can see that in this graph, but we really expect a lot of the bottom to happen in early 2025. So if you're shopping for a home, this might be a strategy that you're looking to consider. If you're buying with less than 20% down, variable rates are trading at about prime minus 1%. So prime, bank prime, is currently sitting at 6.45. So that means variable rates are starting around 5.45% for insured borrowers. For conventional borrowers, those rates are a little bit more expensive, probably prime minus 0.9. So you're about 5.55 if you have 20% down or more. Okay, again, a little bit more expensive if you're looking at rentals, or a little bit more expensive if you're looking at 30-year amortization. In terms of what's happening with pricing in Alberta, the market has certainly slowed down, but that's not to say it has turned off. A number of our clients are still in multiple offer situations, and good properties that are properly listed at the right price are selling in 24 hours. So you still need to be really organized with a mortgage pre-approval. In terms of renewal strategies, if you have to renew your mortgage in the next 30 to 90 days, we're still seeing clients move towards those variable rates so that they have some more time to lock into a fixed rate in early 2025. I'm getting the question a lot, are we worried about the Canadian economy? We had pretty crummy employment numbers this week. We can show that here. And we are seeing some increase in business insolvencies that is somewhat concerning. So people are losing jobs, sort of, in Canada. Insolvencies are increasing for businesses. So we do expect we are heading towards recessionary territory. Now, generally, we do think there is some resilience in the Canadian economy. We don't think anything is going to fall out from underneath us. And we're very resilient in Alberta. We're more resilient in Alberta probably than we are, in Ontario or BC with the higher property prices. So overall, we really are well positioned in Alberta, but I do think if you're listing a property, you want to make sure that you're in contact with your mortgage broker, you're in contact with your realtor, you understand what your go-forward employment situation is, so that if you do sell the property and need to buy a new one, or if you're buying a new one and need to sell the old property, you have an appropriate plan in place for a little bit more of a slow-moving real estate market as we move towards the end of the year.